This conference will now be recorded.
So this is the T account we're working with. They started with 12,000, they completed 9,000, so 9,000 were transferred over. So for the 3,000 that were incomplete, we said they were complete for raw materials, how much? Was it 2/3?
Yes, 2/3.
And how much for conversion costs? 1/3.
1/3.
So with that information, you have to fill this out and come up with an amount. Can you do that? So you need to be pulling out a blank copy of this, just like I just did. You know, you just get one of those, copy it and clear it out. And I want everybody to go and calculate that 45,000.
Professor Boyd, we have a new group member to group 2. Deja is in our group now. And so she submitted our homework for us.
Okay.
Just to let you know. Okay.
Thank you, Deja. And group 2, thank you all for taking her in. What's going to be on this top line? Not group 8, but somebody other than group 8, what's going to be on the top line?
12,000.
Thank you. What's going to be on line 1? How many units did we complete?
9,000.
9,000. How many then were partially complete?
3,000.
And what was that percentage? They were what? 2/3, right?
66.
66%.
Got to be 66.66667. So what's the partially equivalent then?
2,000.
Yep. So the total equivalent units, I told you to add lines what?
1 and 4.
So how much is that?
11,000.
Yeah, I got
Your
11,000.
word for it. So y'all don't want to add 9 and 2. Y'all want to say, well, I think. How much direct materials cost do we have? What goes right here?
22,000.
I take your word for it. Wait a minute, on the wrong. So what's the cost per equivalent unit?
2.
2.
How many units we said were transferred?
9,000.
So how much of the raw materials are going to be transferred out?
18,000.
How much?
It's 2 times
18,000.
9,000. So it should be
18.
2 times 9. How much is 2 times 9?
18.
18,000.
Oh shoot! It really might be 48,000.
What?
I actually might got it right. 48,000.
Now we got to go to the other side. Go to the other side and do the same thing. And then we're going to combine these two costs to get how much is transferred out. And we said the first three lines stayed the same. All you had to do is transfer them over. But what's going to be on line 3?
33%.
33%.
1/3.
1/3.
1/3.
1/3. So what's 1/3 of 3,000?
1,000.
1,000.
So what's going to go on line 5?
10,000.
What's our total cost in here for the conversion cost, labor and overhead?
30,000.
It's 30,000. I'm going to take y'all word for it. So what's our cost per equivalent?
3.
3.
Take y'all word for it. So how much you transferring out?
9.
How much is going to go here?
27,000.
I guess. So what's the total cost we're going to transfer out?
45,000.
So what was so hard about this? What was hard about that? So that's how we get the amount. So whenever we get ready to get this journal entry and this journal entry, we go to this table and figure it out. Any questions? Cash sales, cost of goods sold entry. We've been doing that in Principles 1. When you make a sale, you bring out the cost. You were told what the manufacturing overhead was. Selling expenses were what, 10% of sales? And administrative expenses were 75,000. So there were only 2 numbers that were major new calculations. All of those other journal entries were standard journal entries that we've made. And of course, then you have to post them to T account. That's why we started off with those review problems with you posting to the T account. So that when we got the manufacturing accounting and we're only doing partial things, you would know how to post. Some of you all have an issue with posting journal entry to the ledger. So Jennifer, if you want to practice something with them, practice them making journal entries and then post them to the ledger.
I know how to do that. I was just confused.
I'm just saying other people are having issues with that. So that keeps them from moving on. So once again, was that a hard problem? How long did it take us to do it just now? So y'all got to get some confidence. And I think y'all need to get these cameras on. Especially group 5 that's not turning in any work. So group 5, y'all either got to turn this work in or drop the class, but y'all haven't been doing anything. Okay. So what are we going to next? So all of you all should have these sheets out, okay? Because you see what we were just doing was, basically sort of elementary rote type learning that y'all kind of tried to make, make hard to a certain extent. But now you got to think, you got to really begin to think now that if you were given everything, you're not going to be given anything as we go forward. We are making an abrupt change in the course at this point. In the past, we've just been recording what has happened. The company made something, we made journal entries to show how it was costing making it, and did some statements based on what was made. We now, but managerial accounting involves a lot of planning. You got to plan things that are going to occur in the future. The
Like
first
products,
part,
like future products, selling.
right? So when we plan, we've been doing absorption costing, where we have the product cost consists of materials, labor, and the overhead. And then we subtract selling and administrative expenses to get our net income. That's absorption costing. That's what we've been doing. We're now moving to variable costing. When we do variable costs, the only costs that are going to be in the product now is direct materials, direct labor, and variable manufacturing overhead. Fixed costs are going to be a period cost. And we have fixed selling and variable selling. The bottom line is this: we're going to be doing a new income statement. Let's just try to get a simple one. Let's see, hopefully you can see this. Can everybody see this variable cost part here, just this red one? Well, the bottom line is this: sales less variable product cost, less variable selling expenses gives us a contribution margin. Then the fixed costs are going to be down here. So we're going to subtract variable costs to get contribution margin, fixed costs to get the net income. When we're planning on products and how many we're going to make and what we're going to do and what we're going to sell them for, we use this model. This model is what we use after the fact to show the public. We don't want the public to know what our variable and fixed costs are and how we do it. So for now, the income statement, I was trying to see if I had a simple one. Let's see. Well, let me just create one here. From now, we're going to have sales. less the variable expenses. Okay, the variable expenses typically they're always going to be the raw materials, direct labor, put the DL for that, selling expense, and bad debts. Because the bad debts are going to be a percentage of sales. So as we go forward, sales less the variable expense. And these are going to be our variable expenses: raw materials, direct labor, selling, and bad debts. So when we get this number, what falls out is the contribution margin. And the contribution margin is simply defined as sales less variable expenses. And the contribution margin shows what amount is left to cover fixed costs. And so to simplify things, fixed cost is going to be MOH. So from now on, everything fixes MOH. Administrative expense and interest expense. So essentially, these are the costs that we're going to be working with, and we lump them together. You know, the various amounts of it. So you're just going to be told, this is manufacturer overhead. This is that last problem. What selling expenses was, administrative and interest. And so then we get our net income. So the new income statement, variable costing or direct costing, sales, that's variable expenses, contribution margin, less fixed costs, net income. That is the income statement we use for planning purposes. Any questions? Okay, so that's all of this material. You know, they go into a lot of detail on it, but the bottom line, this is what you're learning. Sales less variable expenses give you contribution margin, less fixed costs give us net income. And we need this because in the past, I have given you all the quantities. On everything we did, you had the quantities. You would no longer be given quantities. You're going to have to calculate the quantities from now on. So what we have are cost, volume, profit relationships. And what you will be calculating the quantity that's required to be sold, first of all, to break even. What quantity would cause there not to be a loss or not to be a profit? And then what quantity causes a certain loss, typically 100,000, and what quantity do we need to make $1 million? So in terms of planning, you know, nobody tells us what the quantity is. We use formulas to tell us, okay, if we want to break even, this is the quantity that we got to make and sell. if we want to make $1 million, this is the quantity. And if we want to minimize our losses to only 100,000, this is what we have to sell. So this chart, just shows us how we got to relate the cost that we have with the volume that we're selling, so that we will, in general, break even. We will probably be focusing on this break even a lot, but then we have the operating loss and the profit. So once again, when a company sells a product, after the fact, we looked at what the sales were, but the company's got to do planning before. And as I said, how many do we have to sell so we can make $1 million? How many do we have to sell to keep that loss at 100? And how many do we have to sell to break even? And what I told you all to do was that you had to memorize 3 formulas. Did y'all memorize these formulas? Mendez, did y'all memorize these formulas?
Oh, sir, I did not. I'm so sorry.
Okay.
I didn't realize. I heard you saying something like that, but I didn't realize this is what you was talking about.
Okay. So
But I will from now on make sure.
okay. So we're on a unit basis for the selling price. We're on a unit basis for the variable cost. We got the total fixed cost. And then we're going to calculate that contribution margin to see if we are, and we have situation, how many we got to make and sell to break even, have a target profit or target loss. So once again, you see this contribution margin income statement. Sales, that's variable cost, gives us contribution margin, less fixed costs gives us a net income. So let's look at an example of what we're talking about. Suppose we're selling computers, and this first option, I'm gonna work with you all. Y'all gotta work option 2. So the selling price is $2,500. You're always gonna be given the selling price. The variable cost, $1,500, you're given that. And then the total fixed costs are $150,000. So you always are given this information. Now, if I want to calculate that contribution margin, I got to do it on a unit basis. So I'm going to go with 2,500 as the selling price. A variable cost of 1,500, just the variable cost. And so my unit contribution margin is $1,000. That is, every time I sell a computer, I have $1,000 going toward these fixed costs of $150. So that's what the contribution margin is showing us. Every time we sell one item, there's 1,000 that goes toward the contribution margin, covering the fixed costs. That's what the contribution margin is about. How much is left after the variable costs are paid to cover the fixed costs?
So what did you do? You divided that. I mean, how did you get 1,000? I'm sorry.
I just subtracted 2,500 minus 1,500 and got 1,000.
Okay.
You all do like to make it complicated. I just subtracted.
I mean, I didn't know what you did. I'm like, wait a minute.
All right.
Okay.
So with this information, we got our assumptions here. And we got our contribution margin, but just to make sure, now you know how we started with those shoes in Principles 1. So I want you to sell just one computer and tell me what the net income is going to be. I want you to sell one computer and tell me what the net income is going to be. Can you sell one computer? One computer. So we're selling one computer. What are we selling these computers for?
$2,500.
2,500. The variable costs are how much?
15.
1,500.
So the contribution margin, this unit
Yes,
contribution
1,000.
margin one is $1,000.
Hmm.
That's always a big number we have to get. Now our fixed cost in this problem is what?
150,000.
Yeah, 150,000.
So if you sell one computer, what does it look like? What's your net income going to be?
Hmm.
Maybe a minus 149,000.
Hmm.
Any questions?
Yes. Are we subtracting the contribution margin by the fixed cost?
Mm-hmm.
Oh.
You sold one computer, okay? You sold
Right.
one computer.
Okay.
The selling price was $2,500. Variable cost was $1,500. So you had $1,000 to try to cover these fixed costs. So I
Jeez.
always want to look at it as one. So if I wanted net income to be zero, how many computers I got to sell? How many computers do I need to sell if I want my net income to be zero?
150?
Well, let's put in 150.
I don't know. I don't know. I just calculate.
Well, you said 150. So what's 2,500 times 150?
Let's see. 150 times 2,500. 30. Jesus. 375,000.
So you got 375. What's our variable cost going to be? $1,500 a computer. So what's 1,500 times 150?
225,000.
And we subtract 225,000 from 375. What do we get?
150,000.
Oh wow.
And
That's
our
right.
fixed cost of what?
150,000.
So we need to sell 150 computers to break even. See how smart Mendez is?
No, thanks, God.
How'd she get 150?
Because
divided.
150 times 1,000 is
No,
150,000.
it's true. I divided 150,000 by 1,000. I believe so. Let me see. I forgot how I got that.
Suppose I wanted to see how many I wanted to.
Mhm.
I'd have to sell to lose 100,000. Then in the next scenario, I want to see how many I had to sell so I can make $1 million.
Nene.
So you see, we're moving in another direction now in terms of we got to determine the quantities. That is, when you're making something, nobody, there's no set thing out there. You got to say, okay, well, this is the profit we want, break even, lose 100, make $1 million. How many computers we got to sell? So how many that if we sold them, the loss would be 100,000? And how many do we have to sell to make $1 million? Okay, let's look at our first formula here that will help us. Whenever we're trying to get that break-even quantity, all we need to do is get the fixed cost, which is 150,000, and then we got to divide it by that unit contribution margin, which is 1,000. And that formula, when you get it memorized, Mendez, will help you to determine how many you've got to sell. So we took the fixed cost, 150. We divided it by 1,000, the contribution margin. So that told us that 150 was the number we needed to sell. Let's go over here then. How many are we gonna have to sell to make $1 million? So we got a target profit formula. To sell $1 million, to make $1 million, we got to sell enough that we're gonna cover the 150,000. Plus, so we got to sell enough to cover 150,000. Then we got to sell enough to get the $1 million. So I did jump down here. And then I'm going to divide that by my contribution margin. I'm going to divide that by the contribution margin. Because I've got to sell enough to cover all the fixed costs. Then I got to sell enough to make $1 million. So if I put that in that formula, how many do I have to sell to make $1 million?
1,150.
Code says 1,000. Okay. Let's multiply it out. What's 2,500 times 1,150?
I got 2,875,000.
2,875,000. What's my variable cost on 1,150 at 1,500 each?
$1,725,000.
Taking your word for it. So what's 2,875 minus 1,725? Is it 1,150,000? Is that what it is?
Yes, sir.
Then we subtract out the fixed costs. We got a million. So we got to sell 1,150,000 to make $1 million. So how many do we now have to sell so that our loss is only going to be 100,000? And if we, first year business loss is going to be 100,000. How many do we have to sell?
I got 250.
You said 250? What's 250 times 2,500?
$625,000.
What's 250 times 1,500?
$375,000.
What's 625 less 375?
Is that 250? No, hold on.
I hope
Oh yeah, it's 250. It's 250. 250,000, should I say?
Let's see. 250,000. And our fixed costs were what?
I think I got it wrong.
So
I got 50 for the quantity sold.
if it were 250, then we would have made 100,000.
Yes, I think I did it all the way around.
You did it what?
All the way around. I'm making profit.
I got 52.
Yes.
50 TOO.
How you got 50?
How did I get it?
Oh, go ahead.
Oh. Since it's a loss, you subtract instead of add.
That's correct. So if it's a loss,
Yes.
it's going to be parentheses 150,000 minus the 100 divided by that same contribution margin. And so once we calculate it with the formula, then we put it in here to see if it works. So what's 50 times 2,500?
125,000.
And what's 50 times 1,500?
75,000.
So 75 minus 125 is what?
50,000.
So the loss is going to be 100,000. So, ladies and gentlemen, we will be working with those formulas all the way through the final exam on your project and everything. So, Mendez, you got to memorize those formulas.
Yes, sir. They're pretty easy though.
You got to work with them and memorize them. So everybody's going to have to be able to complete a chart like that. Are there any questions on completing a chart like that? Does anybody have any questions on what we just did? No questions? Well, it's quiz time then.
We're
So
taking
what?
the quiz.
So what?
You said what, sir?
He said it's quiz time.
Quiz is option 2. Nobody had any questions.
Oh, I did it already.
What?
If I did it, I just turn it in.
Can we do it
I have
all over?
questions. Yeah, let's start from the beginning. That's my question.
Professor, I turned it in, or I mean, do I just turn it in? I did it.
You did it already?
You said that you was gonna have us do it before.
That's 1 out of 17, Professor. 1 out of 17.
Yeah, something else.
1 out of 17? Well, I tell you what, I'm gonna give you all. I mean, yeah, we could go over it again, but then only Mendez and I would know how to work it possibly, and a couple other people would know too. So now I want you to spend 10 minutes trying to calculate this. You got a selling price, you got a variable cost, and you got your total fixed cost. So using that information, I want you to do the same thing. Tell me what's going to be the situation if only one item is sold. I used to never ask that, but when I put it on a quiz, people wouldn't get it right. So if only one quantity is sold, tell me what the income is going to look like. Then I want a break-even quantity. Then I want a quantity when you make $1 million. Then I want a quantity where you lose 100,000.
Okay. Okay, I didn't do that part. I did the other part though.
Okay. So this is what I want you to do. And what I want you to do is, in confidence, apply the formulas and work this out. Now, how many people gonna get it right? How many people are confident? How many Astros and Texans fans do we have in here?
I'm not playing this game again.
The Astros
I'm not
were.
playing this game again.
I'm a Texas fan. That's okay. I know we
How many
sorry.
Astros fans do we have? I mean, excuse me, Texan fans.
Me, faithfully.
I hope not.
I ain't gonna lie, I'm faithfully. I know we trash. That's okay.
So that's what I want y'all to do. I don't want you giving up. giving up in the second quarter and stuff like that.
Oh yeah, the Texans need to give up though. That's it.
Say what?
Yeah. I said, yeah, we need to give up. Like it's done for. We good next season.
All right. Does everybody see the assumptions? So I got the assumptions a little closer. Let's see if I can try this. So I got everything on one page. So how many Dallas Cowboys fans do we have, and how many Houston Texans fans do we have?
Cowboys fan right here.
All right, Brittany, so that means you're going to knock this out and get it done.
Ouch.
Tells me you're a Cowboys fan, Professor.
No.
Oof.
So there are 4 columns I want you to complete. And see, we did this kind of the last time on that process costing. And you all told me y'all knew how to do it. Now it's a little bit more involved. But this is all you're doing. So this is all you're doing right now. So I'm not asking you to issue any common stock. All I'm asking you to do is to do these first 4 columns, just like we did them before. So I'm gonna give you all, I guess, 10 minutes. See, you shouldn't take that much time. So we'll give about 10 minutes so we can be.
I have a question. Where
Yes.
where is it the same amount? Like the 150?
It is right here.
Where?
3,000,
Oh, okay.
1,500,
For the break,
300,000.
okay, for the break even 3,000, for the 1,500,000, and for the 100,000, 300,000, right? I just want to confirm. Make sure.
I want to know what happens if you sell one. Then the question mark becomes, how many do you have to sell to break even? Then how many do you have to sell to make $1 million? How many do you have to sell so your loss will only be 100? So in this first one, you're given the quantity, okay? In this next set, you got to calculate the quantity, and then you're proving it. So just do the first 2 rows. Let's just do the first 2 rows. Tell me what it looks like when you sell one item. Then tell me how many you got to sell to break even. And break even is a standard thing marketing people use all the time. Upper division classes assume that you can calculate a break even. If you go into marketing, you can't do a break even, and wonder what's wrong with you. You go into entrepreneurship. So there's nothing strictly accounting about this. So take 10 minutes and let's see if we can get to the first two. Teammate, we expect y'all to do all four, but Okay, what's my loss if I sell one? How much money do I lose if I sell just one?
$298,500.
Are you asking me or telling me, Parker?
I'm telling you.
You're telling me.
Yes.
So she says she's telling me that this loss is $298,500. Does anybody agree with her?
Yes, sir.
Yes, sir.
Me.
Okay, so we got 3 or 4 with it. How many did we have to sell to break even?
$200.
Anybody agree with that?
I agree. That's what I got.
Yes.
Where's everybody else at? Okay, so let's see if we can work this first one out. If we sold one, we'd have $3,000. The variable cost would have been $1,500. So the contribution margin, every time we sell one, $1,500 is contributed toward covering the fixed costs and making a profit. So since our fixed costs were $300,000 and we only had income of $1,500, we ended up with a loss of $298,500. On that break-even formula, break-even quantity just simply equals the fixed cost slash the CM. So that's going to be equal to the 300,000 minus this unit CM. So what's that going to equal? Is that 200?
Yes.
Okay.
Professor?